Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
Well, U.S. markets are closed, but the Zacks research and trading team is here, hard at work. These guys never give up trying to find money. All right, so where are we at? It's still earnings versus Europe. Remember in September I said that the earnings season, Q3, would overtake European worries. Well, now we're back in the same boat. And the lay of the land here is that on Friday, S&P comes out with the downgrade we were expecting for 9 EU countries. France loses an A in its triplet of A's. And European markets are holding up well this morning. We'll see what happens this week with U.S. markets. Also, just before we came in, we saw that a French bond auction went surprisingly well at good rates. All right, Shiraz, what do you see in earnings season that is going to, take the headlines away from Europe here? Pockets of strength, pockets of weakness.
It's all a question of relative to expectations, and expectations have really come down over the last 2-3 months. But actually, since the second half of 2011, my sense is that they are so low that the corporate sector's ability to get ahead of them is a lot easier than what we had seen in the prior quarters. So I'm a lot more optimistic about the Q4 earnings season than I've been.
So you're saying that analysts were ahead of this in bringing estimates down?
Absolutely.
Okay.
Absolutely. We have low single-digit year-over-year growth rate expectations. The first single-digit, Kevin mentioned it last week here, and we have a very unusual negative comparison compared to the third quarter. So the overall expectations are very, very low.
All right, Steve, what do you see? Pockets of strength? Pockets of weakness?
There's going to be both. I think I've used the word mixed on this earnings season. So after 11 straight really strong earnings seasons, coming out of the bottoms of March 2009, I think there's going to be the first one that's going to be a notch less. But here again, expectations are fairly low. And it's another one where it's not just the number they put up, it's what they say about going forward. Right. It is that outlook for the rest of 2012 that people are going to be very focused on. Right. And that's what's going to give people confidence to, you're going to keep buying up stocks. We've had a nice little rally here for a while. Or is it time to pause because maybe expectations are too high? So I think people are going to be very focused on that guidance.
Yeah. And J.P. Morgan, supposedly one of our stronger banks, not forecasting the best outlook for the coming quarters here.
Yeah, very underwhelming. And in fact, I was really surprised looking at the Zacks consensus for Goldman Sachs. It's been dropping like a stone over the last week to a month. And that's not unusual for the broader financial sector. So it is earnings challenged in the finance sector, but that is not representative of the broader corporate sector.
All right, Kev, what are you saying?
Well, let me just say, even though analysts have been reducing earnings really over the last couple of months leading into this earnings season, companies still are struggling to be able to hit their numbers. And these analysts were doing it for a reason. Where there is smoke, there's fire. You are now starting to see this show up, these reasons show up in actual earnings reports. But I agree with Steve. Everybody is really going to have to pay attention to guidance, because if you have a small miss but you have a solid guidance, that could offset what they had just seen. So everybody's very, very keen on what does a company see in the future. People are desperate to be able to get some kind of visibility.
Right, because we've survived this quarter. We'll survive the first quarter. We want to know, what does it look going out? How bad will Europe impact us?
Right.
All right, we'll be back in segment 2 with Stock Picks.